Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. Alright, in this particular video we are going to be discussing the positive volume index indicator. Alright, the positive volume index indicator. It's a custom indicator, so you will have to download it from an external source and you have to add it to your indicators library for your MetaTrader platform before you can then use the indicator on your chart. Alright, so I'm just going to be inserting the indicator right away. The positive volume index indicator. So this is how the indicator looks like. I'm just going to change the color because this color is very light, okay, so that I can easily see it properly, right? Okay, indicator list. I'm just going to okay, I'm just going to change this to red, and I'm going to change this to this one. Okay, I want to, for easy identification, let's use a different color, right? Okay, so this is how the indicator looks like. Okay, this is an oscillator. All right, it helps forex traders to identify overbought and oversold zones. Okay, so let us understand how this indicator functions, right? So the indicator plots 10-period EMA and oscillates between defined levels. As we can see, it's a well-defined level that the indicator oscillates within, right? This is an indicator window, right? And the oscillator oscillates within this indicator window. So when the positive volume index is near the upper level, it signals overbought conditions, okay? Conversely, when the indicator approaches the lower level, it identifies oversold conditions. All right. So how do you use this indicator to identify buy and sell trading opportunities? In as much as this indicator gives you signals of overbought and oversold conditions, in order to use this indicator to identify buy and sell opportunities, you have to watch out for crossovers. Okay, so you have to watch out for crossovers. The indicator makes use of, you can see, it makes use of MA periods, the 2 MA period and the 10 ME period, okay, as we can see. So when the faster period crosses below the slower period, you have a sell signal. It's as easy as that, right? The signals are very easy to interpret. When you have the faster moving average cross below the slower moving average, you have a sell signal. So in that case, you can consider entering the sell, setting your stop loss above the swing high, and for your take profit, just wait. You can either use your support zone, right, near support zone to determine your exit, or you can use other indicators to exit, or you can decide to wait for the bullish crossover to happen for your exit. But if you're waiting for a bullish crossover, you might miss out on a lot of profit because the crossover might happen late. For example, here you can see that the crossover is happening when the price has already almost gone halfway back against you, right? Imagine you had sold here, and when you had the opportunity to exit here, you're exiting almost more than halfway of your profits. All right, so I would recommend using support levels to determine your exit points. All right, so make sure you plot your support and resistance levels on your chart so that when you enter a sell after confirming, or when you enter a signal, a trade rather, whether it's a sell trade or a buy trade, after confirming with the indicator, after confirming with the positive volume index indicator, then you can proceed to exit after you have confirmed your entry with after you have confirmed the entry signal. Then you can proceed to exit when the price gets to the support level or resistance level, depending if it's a sell trade or a buy trade. And then for confirmations, I'm going to recommend also using moving average. Yes, you can use moving average to also confirm your signals. So for example, we had a sell signal here, right? So having received a sell signal by the positive volume index indicator, we can see that the moving average actually confirmed that sell signal around here. So this would have been a great place to enter a sell. Remember that confirmations add a layer of confidence, right? So when you have confirmations, it adds a layer of confidence to that trade, okay? And then you can actually use any other indicator of your choice for confirmations, right? Now let us look for a buy example. This was a sell example. Let us look for a buy example. So when you have the indicator at the bottom part of the indicator window and you notice a crossover, right? That is a buy signal. Okay, so we can see that right after this signal, we can see how the price began to go up. Okay, so we would have considered entering a buy trade after the moving average has confirmed the buy. You can see that we got a confirmation around here as the price cut above the moving average. And then as for our sell, we can consider, as for our exit, sorry, we can consider exiting our trade at the next resistance zone, or you can use the PVI indicator to determine your exit. But remember, like I said, if you are using the PVI to determine your exit, you will likely get the signals late. In this case, you can see this is where you would have exited your sell. This is where you would have exited your buy trade. Here, this is where you would have exited your buy trade if you are using this PVI indicator to determine your exit. Whereas this resistance zone would have been a better place to exit. However, if the trend is strong, that is the reason why it is better to use this indicator in a trending market. If the trend is strong, you don't even need to exit at the nearest resistance. You don't need to exit at the first sight of this crossover. Make sure that you use trend lines, please, because the trend lines are going to help you to confirm possible reversal. Okay, so when you have a strong trend, wait for a break of structure before you exit your buy. In a bullish trend, if you're in a buy trade, then for a bearish move, wait for a break of structure to exit your sell. That is going to be a bullish reversal. So in this case, instead of exiting at the nearest resistance or exiting at the first sight of this bearish crossover, you wait for a break of structure. So these higher highs and higher lows are evidence that we are in a buy trend. So instead of exiting at here, unless if you want to just be scalping, you want to just you buy low and sell high, and you ride from the next high to the next low and that. Unless if you want to do that, if you're not doing that, just ride the trend, enter your buy after you confirm the signal, and then wait for a break of structure. When the higher high and higher low structure has been broken, then you can proceed to exit your buy trade. So that's another effective method to do that. If it's a sell trade, then the reverse is the case. Wait for a break of structure in upward direction and then you exit your sell trade. All right, so that is it for this indicator. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.